Hello, everyone. Thank you so much for joining me today on your Wednesday. My name is Trisha Thomas. I'm a partner here at Fourlane. Last week, I went over with you guys customizing financial packages for your management team. And this week, as I told you guys, we're going to talk about balance sheet reconciliation. Before we jump into today's topic, I want to remind everyone that we do have a YouTube channel. So if you have missed any of our webinars, you can always find them on our channel at youtube.com/Fourlane. Last week, I was asked about when these get uploaded, and it takes about a week. So the one we recorded last week will be uploaded this week, and then this one will be the following. Okay, so also remember, you can subscribe to our channel, and that way you get the notifications whenever we do upload the new videos. There's over 200 videos and we add more every day, so please like and subscribe to our channel. Also, we would love to have you guys on our Facebook group. Our group name is Fourlane QuickBooks Enterprise. There's always lots of great information in that group, so please feel free to join. So we heard from our clients the frustration of having to reach out to Intuit when they have technical issues, and so we created our own on-demand support to give our clients what they need to take away that frustration. So you can see we can help with troubleshooting, software issues, user issues, any kind of software installation. So our pricing starts at $25 per QuickBooks user per month for up to 5 users. It then drops to $20 per month for up to 6 users or more. So how it works. Once we get you signed up, whenever you need help, all it takes is just an email to our help desk. We want you to include the details of what's going on, your urgency level, and then what is the best time to contact you. And then what you can expect from us is a return email within an hour with the meeting date. That way we can share screens, see what's going on, and get you back up and running as soon as possible. So if you'd like more information about the support plan we're offering, please reach out and we can get you those details. Okay, so I touched on the importance of having a month-end close process last week. For this session, we're going to talk about steps we recommend to complete each month with the focus around reconciling our balance sheet accounts. So I'm going to go over with you guys the recommended month-end close steps at high level. I'm going to talk about why we recommend reconciling the balance sheet accounts. I'm going to walk you through some actual reconciliation of a few accounts so that you can see it. And then finally, we're going to look at the reporting results by reconciling inside of QuickBooks. So when it comes to QuickBooks, they make it easy to not only reconcile our statement accounts, but to reconcile the majority of all of the balance sheet accounts, so you're able to maintain your detailed reports inside of the accounting file instead of a separate document such as an Excel spreadsheet. We have clients that come to us with these big detailed spreadsheets where they're manually tracking all of the activity that's also being created inside their QuickBooks accounting file. They spend hours each month manually reconciling each of these accounts to make sure that the ending balance match what is in their accounting file. Today, I'm going to show you how that reconciliation can be done inside of QuickBooks and those manual spreadsheets are no longer needed. Okay, so hop on over to our sample file. So the month-end close process itself is the final steps to review all balances for accuracy before setting that closing date and creating the financial packages you need for your management team. So when it comes to, we're ending our month, we're ready to start our month-end close process. The first thing we want to make sure is that all transactions have been created for both the sales side and the purchasing side. So that means all inventory has been received and all customer invoices has been completed. Some of my clients that have large teams that have access to QuickBooks set a temporary closing password to make sure no other transactions are backdated in the following days. So let me show you where that's at. I have a lot of clients that have never seen this before. So under Edit, and then under Preferences, the very top is your accounting. And then you know that these are all your different areas for preferences. My preference is what you want when you log in to see or not see how you want it to function. And company preferences is the whole entire company file. Any changes that you make will affect the company. So you do need to be logged in as the admin to do these. But at the very bottom, you see this section called closing date. And what this is that when we have confirmed that all the transactions have been created, we've done everything we need to close out the books. We are ready to create our financial packages. We want to set a closing date and password. So the date would be the date of the period that we just closed, and the password is going to be a password that isn't shared with anyone other than people that are allowed to create transaction in a closed period. Okay, so this is very important. A lot of times we see clients that they do it just for the year instead of every month. Well, the problem with that is that you're allowing people to have access to create transactions in closed periods if you don't set this date. This is the way to prevent it by closing that period. Okay, so now let's talk about starting the review process itself. So I like to start at the balance sheet. So again, we talked about making sure everyone has created all transactions. So our balances, now what we're looking at is, does the balance make sense? Is there any other transactions that need to be created, such as month-end journal entries to allocate our prepayments or our depreciation? Do we need to create any accrual journal entries? Taking a look at our accounts receivable. Do we have anything that, possible write-offs? So sometimes clients come to us and their CPA has them wait to the year end to do write-offs. Well, if you think about that, if you're creating and invoicing your customers and recognizing income every month, and you know that a client has gone out of business, or for whatever reason, you're not going to collect that payment on that service you provided, why wait till the end of the month to write off that invoice? You want to be able to look at your balance sheet and know that your open accounts receivable asset value is correct per month, not have to sort through and say, well, I know we're not going to get this and this and this. Go ahead and clean it up. Have it clean every month. The same thing with our accounts payable. What we're looking at is there any credits that we need to offset with outstanding bills? Or is there a vendor where we have a credit and we're no longer doing business with them and we need to reach out and request a refund check? So again, end goal being that this is the balance at the period end when we're closing out our books. Okay, we want to take a look at our inventory. And what we're looking at our inventory is making sure that there's no negative quantity on hand. Everything looks good in place as it should be. And of course, our most important that we always say is we want to make sure that all of these detail reports tie back to our balance sheet. So every one of these totals on our detailed reports should match exactly what the balance sheet total shows for that account. So my accounts receivable should match, my inventory, my accounts payable, everything should tie back and match. Those are just what we call our supporting documentation or detail reports that match our balance for each account. Okay, so we also want to take a look at any transactions when, that it's, for example, we see our work in progress coding process and we have a credit balance at an asset account. So that tells us we need to do our allocations to move our coding process over to our cost of goods sold. So we want to review and make sure that we have debits where they should be and credits where they should be based on the account type. Okay, so coming on over to our our profit and loss. So if you're using the class feature, what you want to make sure is that every transaction has been classed. You don't have anything sitting in this unclassified account. Because what this is telling us, as I told you guys last session, when we create these month-end close processes, we're able to course correct faster when we're doing it every month. So if a situation is you have transactions in this account, it means that when someone created the transaction, they forgot to select one of their classes, or we've started another revenue stream and we need to create a new class for these unclassified transactions. So allowing you to stay on top of any changes that we're doing instead of waiting to that year end and then finding this large balance that we now need to offset. Okay, so coming and looking just at our standard profit and loss, I like to look at it for 3 months. And the reason why I like to do that is so that I can see the trends. This helps to identify if there are any, for example, allocations for accruals, or if we just missed where we posted something, or we posted in, for example, computer purchase, and we posted it to office expense instead of to our fixed assets. So it allows you to see what is the normal trending balance for each of these accounts. Okay, so of course, at our account, our income and our cost of goods sold, we're just going to make sure that they're in line with what we expect. Our gross profit is what we are expecting. And then coming on down to our expenses, we can see, so for example, our car lease, every month we're posting the same transaction. That's the trend that we would expect. Okay, so coming on down here, you can see that we had our auto insurance is $325 per month, and we missed it for December. So now this allows our accounts payable team to go research what happened. Did we not get the bill, or did we post it in the wrong account? Do we need to create that journal entry to accrue for that bill? So this is allowing you to stay on top to make sure that transactions are created in the correct period. Instead of, for example, if we didn't get the bill until next month, we wouldn't want it to post in January, because then we're going to duplicate January's expense for our auto insurance. Okay, so you can see here we also missed our insurance allocation. So this allows us to, go back to our team and course correct on what are our monthly journal entries that we're doing, and how do we ensure that we are posting those every month. Okay, so we just want to go through every account and just make sure that everything is as should be. No balance is higher than normal. It's just that steady what the trends are for those accounts. Another thing that we say take a look at is make sure that we're not creating any transactions to a header account. And what I mean by that is, for example, professional fees is a header account, and we've created under it 2 sub-accounts, accounting fees and payroll service fees. And so what we're saying is that we want to track for our professional fees, what are the 2 types of professional fees that we have. If we, instead of choosing one of these sub-accounts, and we choose the GL account professional fees, what QuickBooks is going to do is it's going to create underneath these, and it's going to say professional fees -other, meaning I don't know which one of these it is because I didn't post to a sub-account. So we want to make sure that we, look at those every month and course correct those so that everything is in line as we expected. Okay, so now once we've reviewed all of these, we've made sure all of our allocations have been done, everything ties back to our balance sheet, we don't have any negative inventory, we've done inventory adjustments for our physical count, we now want to start the actual reconciliation process. Okay, so taking a look at our chart of accounts, you know that you can reconcile your statement accounts. So all of our bank accounts, all of our credit card accounts, but QuickBooks actually allows you to take it a step further and reconcile the majority of your balance sheet accounts. And I'm going to tell you why. There's a few accounts you don't reconcile, such as your accounts receivable, your inventory, your accounts payable, because you have those detail reports. But for other accounts that are, so example, prepaid insurance, prepaid inventory, those are just in and out accounts. You're posting, you're creating a check to, say I paid for prepaid insurance, and then we have our monthly expense allocation. And so we have debits and credits, and they can offset each other. So I'm going to show you, for example, our prepaid insurance inside of QuickBooks. So think about this, going back to that slide the slideshow that I showed you with the spreadsheet. And this is that spreadsheet. So what you're seeing here is where I made my payment for my insurance, and I made it for auto insurance as well as my general liability. And then you're seeing every month when I allocate the expense to the correct period. When you think about how big that report's going to get and how big that spreadsheet's going to continue to be. So since we have this inside of QuickBooks, we don't need it on an Excel spreadsheet. And what we want to do is we want to reconcile the account so that all we're seeing is what is actually still outstanding. What have we not allocated for? Okay, so I'm going to go through that. I want to actually reconcile a few accounts for you so that you can see it, and that way it'll make more sense to you. So the reconciliation process itself, you can come to it here on your home screen, or some people like to go under banking and reconcile, whichever one you prefer. It'll take you to the exact same place. This is the same place that you go to when you're reconciling your statement accounts. So you can see I've got a list of all of my balance sheet accounts. The biggest difference between a statement account and a non-statement account is with the ending balance. So a statement account, when you go to reconcile the account, you enter the ending balance that is on that statement. A non-statement account, the ending balance is always going to be 0. And the reason that is because our goal for reconciling these accounts is just to offset matching debits and credits to reduce what our spreadsheet looks like so that we have a detailed report that shows what is still outstanding, what hasn't been allocated, and that balance ties back to our balance sheet. Okay, so let's start. The account that I chose to start off with is our prepaid inventory. So I'm going to just hit continue. So I've already done it in this file, but I recommend when you go to start doing this is that you choose this button, the columns to display, and you want to make sure that you check your payee and memo. That way, the more details you have to match these debits and credits, the easier it's going to be. I like to also sort by payee so that they're all in line with each other. Some people like to do amount. I like to do payee, that way I have it in line, they're all together. Okay, so we always recommend when we're teaching this to clients, the more information you put in the memo, the easier it's going to be to match them, especially if you don't have a one-for-one match. Okay, so again, our goal is just to offset our matching debits and credits. If you want to see what a transaction was, you want to see the detail, you can drill into here. So if I double click on this transaction, it will take me to the actual bill so I can see, what was in this $20,000 bill. And then when I hit that X button, it takes me back to where I was. Okay, so I've got here my materials vendor for $40.50. So I'm going to look over here and see if I have a matching, and I do. So I'm going to check both of these. Again, what you're looking for is your balance difference. Down in the bottom right-hand side is always 0. We only want to reconcile our matching transactions. So we've got our Germany vendor over here for $20,000, and we have a matching $10,000 over here. I'm going to choose this 0 too. Okay, so now what we have is we have our balance difference is 0. And once I reconcile, all that's going to show is what is still open. I'm going to go ahead and hit reconcile now. Okay. Okay. Ooh. It went on my other screen. Okay. I'm going to do it for a couple of more accounts just so that you can see. So we'll go ahead and let's do employee advances. And same thing. We'll choose the date that we're closing, our ending balance of 0, and then hit continue. And I'm going to sort by my payee. And then I'm going to choose my matching. So D. Michael received a advance of $1,000. And then let's see if we have a match. And our balance difference is 0. So that tells us that we got the payment for that. And then Vicki King has paid back 300 of her advance, so we can't reconcile anything else. So let's reconcile now. I'm going to do one more, and then I'm going to show you the reporting, because I want to show you a key feature that you can use. So when it comes to our prepaid insurance, this account here, you might not be able to do every single month because it's going to depend on the term of your policy. So is it a 6-month policy? Is it an annual policy? So you might only be able to do it once a year when you have allocated the full policy. Okay, so in this case, in this one, I know that both of my insurance policies I've allocated everything to. So in that case, instead of one at a time selecting them, I can actually choose the mark all, and it will select all of them for me. And now I verify my balance is 0 and reconcile now. If you ever had a balance difference, you don't want to hit reconcile now, because what will happen is it'll post those dollars, that difference, it'll create an account on your P&L called reconciliation discrepancy. So, you have to make the decision. If it's pennies, do I want to go research it? Do I want to make an adjustment, or do I want to post it there? My accounting brain wants to go find the pennies. So, but time-wise, it doesn't make sense to waste for a couple of pennies. Okay, so I'm going to hit reconcile now. And now I want to show you some reporting results from doing this. Okay, so if we come back to our balance sheet, and I'm going to change this to the 31st. Okay, and so remember I showed you guys that prepaid, I'm going to start with inventory and we'll go down the list. So our prepaid inventory, whenever we're running the report and we're using this to be our supporting documentation, we want to take our from, and you want to remove your from so that you have all the data in there. Okay, so this is every in and out for this account through December 31st, but you can see that we have cleared some of these. So we want to reduce our report layout to only show what's open. So I'm going to do that by choosing Customize, and I'm going to filter, and I'm going to say Cleared, and I'm going to say just show me what didn't clear. Okay, so now I've reduced to what is left, and so I can see that the 29,156, if I come back to my balance sheet, that matches my balance sheet. And then the last thing that we would want to do is we want to sort it by name. So we want to sort it by our vendor, so that way that it looks nice and streamlined for our reporting. But this is now our supporting documentation for our balance sheet. This became our spreadsheet that we used to keep in Excel to make sure that everything tied back. Okay, so I'm going to do a couple of more just so that you can see it. So in the case of our employee advances, we did that one also. So again, I'm going to remove the from, I'm going to refresh, I'm going to customize, I'm going to say show me only uncleared, and then I'm going to say sort by name. Oh, I did number, sort by name. So now you can see that Jonathan Graham still has an outstanding $500 for his advance, and Vicki here, she had $1,500, but she's paid back $300. So in our employee advance account is $1,700. So I want to also show you guys and point out, sometimes we have clients that for their employee advances, they will actually make the employee's name sub-accounts under here so they can see the detail. By using this report, we don't need that. This report gives you the details, and now we don't have on our balance sheet, on our financial reporting, the details of each employee that received advance. We don't need that on our financial report. We can put this supporting documentation to show who has that, advance and where are we at. Okay, so what I would recommend doing is when you do these, so you go through your first time and you do all your reconciliations, you'll create all of these reports for your supporting documentation. And then you can see if you like your report list. I'm going to go and I'm going to create a new group. Now I'm just going to call this month and close. You can call it, whatever you want, but I'm just going to do it easy peasy, month and close. And now I'm going to come back to our report, and then I'm going to memorize it. And I'm going to call it Employee Advance Detail. And I'm going to put for a month and close. And I'm going to say save it in our month and close. So it'll give me all my drop down, and I'm going to say save it in there. Okay, so now that report is saved, and we would save all of our detail reports that we needed. And then what would happen is when we go and we close out January, and we're ready to, we've done all of our reconciliation, and now we want to go and create our customized financial reports. All we need to do is go to our reports, our memorized reports, and under our month end close, there's our report we created. So we can select, it'll have the listing of all of those. We can select it. And now the only thing that we would need to do is change our date range. And now we're ready to export and create our financial package for January. So that's so much easier than that manual work of having to maintain that spreadsheet outside of QuickBooks and showing that they tie together and making sure that not only are you posting the transaction inside of QuickBooks, you're now having to manually post it in a spreadsheet. Now you can take away that manual process of doing that manual process of reconciling, and do it all inside of your QuickBooks file. Okay, so we've got a few more minutes. Let me turn it over to our question session, see if we've got any questions before I let you guys get back to your day. Please, when we have it uploaded next week, take a look at it. And of course, reach out to us if you guys want any help on any of these processes I went through. Of course, we do offer reoccurring services. So if you need help and you need another set of hands to take on some of this work, we absolutely can do that. Okay? Thank you guys so much for your time today. Have a good week, and we will see you next week. Thank you.